Korea Market Explained, Episode 3. 72 years ago, the Korean War ended. Korea was devastated, one of the poorest countries on the planet. Today, Korea is one of the top 10 arms exporters in the world. Its tanks are defending NATO's eastern flank in Poland. Its missiles are protecting Gulf states from drones and ballistic missiles. Its fighter jets are flying in Southeast Asia. And for investors, the question is, how do you own this? In 2024, the four major Korean defense companies saw their combined stock prices rise between 70 and 300%. The order backlog of the big four defense companies crossed 100 trillion, won by mid-2025, roughly $70 billion. That is 4 to 5 years of production already locked in, and 2025 is on track to significantly exceed 2024, with Korea's Defense Export Agency targeting $23 billion in new contracts this year. This episode explains who these companies are, where the contracts are coming from, what the stocks have done, and, critically, what could go wrong. Let's start with the numbers, because the scale of this shift is genuinely remarkable. In 2019 and 2020, Korea's annual defense exports were around $3 billion. Steady, unremarkable. Then Russia invaded Ukraine in February 2022. Eastern European NATO members, Poland, Estonia, Finland, Romania, suddenly needed weapons fast, and they found that the US and major European manufacturers had backlogs stretching years into the future. Korea could deliver. In 2022, Korea's defense exports exploded to $17.3 billion, more than 5 times the prior year's level. Why Korea? 4 reasons. First, price. Korean hardware is typically 30 to 40% cheaper than American equivalents. Second, delivery speed. Korea has capacity and it uses it. Third, performance. These are battle-proven designs that have been refined over decades. Fourth, no political strings. Korea doesn't impose end-use restrictions the way the US does. The result? Korea went from number 15 to number 10 among global arms exporters, and the government is targeting the top 4. Now let's meet the companies. The 2 biggest names are in land warfare. Hanwha Aerospace is Korea's largest defense company, and as of mid-2025, it became the 5th largest stock on the entire KOSPI by market cap. Its flagship products are the K9 Thunder's self-propelled howitzer, currently used in 10 countries, and the K239 Chunmoo multiple rocket launcher system, which has been exported to Poland, the UAE, and Saudi Arabia. In 2024, it generated 11.2 trillion won in revenue. Operating profit in the first half of 2025 alone was roughly $1 billion. The stock went from 248,000 won in June 2024 to 939,000 won in June 2025, a 279% gain. Forward. P/E, 32 times. Hyundai Rotem is the maker of the K2 Black Panther main battle tank, one of the most advanced in the world. It's part of Hyundai Motor Group, and roughly half its revenue still comes from railway systems. But the defense side is what's driving the stock. Poland has committed to buying hundreds of K2 tanks in a deal ultimately worth tens of billions of dollars. Romania followed with its own contract. The stock went from 40,000 won to 212,000 won, up 428% in a year. At 23 times forward earnings, it's actually the cheapest of the big names. The other major names cover air and precision systems. LIG Nex 1 is Korea's missile specialist. Its Cheonggung-2 medium-range surface-to-air missile has been exported to the UAE, Saudi Arabia, and Iraq. In 2024, it signed $2.6 billion worth of Cheonggung contracts with Iraq alone. Annual sales hit a record 3.28 trillion won in 2024. The stock gained 185% in the year through June 2025. Valuation is the highest of the group at 44 times forward earnings, reflecting investor confidence in its precision weapons export pipeline. Korea Aerospace Industries, KAOI, is the country's only integrated aerospace manufacturer. It makes the FA-50 light combat aircraft, which has been sold to Poland, Malaysia, and the Philippines. It's also developing the KF-21 Boramae, Korea's next-generation homegrown fighter jet, which is significant because it reduces long-term dependence on US platform purchases. KAI gained 80% in the year through June 2025, but then continued rallying, up 190% year-on-year through early 2026. And then there is Pungsan, the overlooked one. Pungsan makes ammunition, not sexy, but indispensable. Every K9 howitzer needs shells. Every war consumes enormous quantities of ammunition. Pungsan crossed 1 trillion won in sales for the first time in 2024 and trades at only about 15 times earnings. making it the most affordable way to play the Korean defense supercycle. Now let's talk about where the money actually comes from. Poland is the anchor of Korea's defense export story. In 2022, Poland alone accounted for the largest share of Korea's $17.3 billion export peak. This relationship started with a landmark $22 billion framework deal in 2022, K-2 tanks, FA-50 jets, K-9 howitzers, and Chunmoo rocket launchers. In 2025, Poland signed a $6.5 billion contract for 180 upgraded K-2 tanks for local production, then a $4 billion guided missile deal with Hanwha through a Polish joint venture, and analysts expect another 21 trillion won of orders from Poland in 2026. Poland is not just a customer, it is becoming a production hub for Korean weapons in Europe, with local content requirements that are gradually building Polish manufacturing capacity around Korean designs. Beyond Poland, Romania ordered K-9 howitzers for $920 million, Iraq signed a $2.6 billion Cheonggung missile deal, the UAE has the Chunmoo. Vietnam became the first ASEAN buyer of the K-9 in 2025. Estonia, Finland, and Norway are all operating Korean howitzers along NATO's eastern flank. The geographic diversification of Korea's defense customer base is broadening fast. The question is no longer whether Korea can win export deals, it's whether it can deliver them all on time. Now let's look at what the stocks have actually done. If you had bought the Korean defense basket at the start of 2024, you would have significantly outperformed almost every other sector globally. Hanwha Aerospace up 279% from June 2024 to June 2025. Hyundai Rotem up 428%. LIG, Next One up 185%. KAI up 80% in the same period, but then accelerated further. Meanwhile, Kospi as a whole was essentially flat or slightly negative through most of this period. This is important context. Korean defense is not a Korea story. It is a global geopolitics story that happens to be expressed through Korean equities. The new KDE FETF, which launched in February 2025 and gives US investors direct exposure to the Korean defense basket, returned 139% in its first 7 months. That is not a misprint. But here is also what happened. In August 2025, when Trump-Putin summit speculation ran hot, LIG Next One fell 15% in a single day, erasing an entire month of gains. Hanwha fell 5%. These are high beta stocks that are priced for perfection. Which brings us to valuation. Look at the forward PE ratios. Hanwha Systems, 38 times. LIG, Next One, 34 times. KAI, 25 times. Hanwha Aerospace, 23 times. Hyundai Rotem, 22 times. Now look at Lockheed Martin, the world's largest defense company, 15 times. Korean defense companies are trading at a significant premium to the American giant. Part of that is justified. They are growing much faster. The Big Four's combined operating profit is expected to nearly double in 2025 to over 5 trillion won, a tenfold increase from 2021. But the premium also means any disappointment is punished hard. Backlog revenue takes years to convert. Supply chain delays, cost overruns, or geopolitical surprises create downside you would not face at a 15 times multiple. How do you invest? 2 main options. Direct Korean stocks through interactive brokers or a Korean broker, which we cover in detail in episode 4. For the defense sector specifically, the 6 names to know are Hanwha Aerospace, 012450, Hyundai Rotem, 06435, LIG Next One, 07955, Korea Aerospace Industries, 04781, Pungsan, 10314, and Hanwha Systems, 272210. If you want a single ticker solution, KDEF, the Plus Korea Defense Industry Index ETF, is the first US-listed Korean defense basket, launched in February 2025, holds all the major names, accessible through any US brokerage. Now the 3 risks you must understand before investing. Risk 1, peace deals. Any credible Ukraine ceasefire or Middle East de-escalation triggers sharp selling in Korean defense names. We have already seen this. The backlog provides a floor, but sentiment can overshoot in either direction. Risk 2, EU self-preference, especially France. France actively pushes EU partners toward domestic platforms from Daewoo, Dassault, and Nexter over Korean alternatives. Paris has used its political weight to steer contracts toward French and European defense groups. For Korea, this creates a structural ceiling in Western European markets, regardless of price or performance. Risk 3, Valuation. At 30 to 44 times forward earnings, these stocks require consistent execution, no order delays, and no margin compression. One earnings miss, as LIG Nex one demonstrated, can wipe out weeks of gains instantly. 3 things to take away. 1. This is a real industrial story, not hype. Korea spent 50 years building a defense industry from nothing. The companies are real, the products are battle-proven, and over 100 trillion won in backlog is signed. The fundamental case is solid. 2. The valuation demands perfect execution. At 25 to 40 times earnings, you are paying for years of future contracts. Any disruption to that timeline is punished immediately and severely. 3. The easier way in now exists. KDEF gives US investors access to the entire Korean defense basket without a KRX account. For individual stock selection, Interactive Brokers now provides direct access to Kospi. The friction is lower than it has ever been. Next episode, how foreigners actually buy Korean stocks, ETFs, ADRs, and the direct KRX route, including what changed in 2025 that makes all of this significantly easier. Subscribe at KME Official. See you there.